Okay, so we're only seeing dollar strengths, but we're not seeing there's gonna be divergence definitely between the dollar yen and the sterling yen. Let's take a look at the analysis to understand why. This is very rare, or it doesn't really happen frequently, but it will happen. It is the reality of the situation. The dollar will rise against the yen on dollar strengths, not on yen weakness, and therefore we are not going to have the sterling rise against the yen. So let's take a look at sterling yen. We're looking now at the 4-hour charts and the 1-hour chart. This is updated today. The segregation we believe is correct. We want to do shorts because there's negative momentum on the 4 hours like you see here. There is negative momentum on the 1 hour like you see here. Everything is going down, so of course we're going down to, our projections are 148. All right, let's take a look at the internal segregations. This is the 4-hour chart. The segregation have been updated and checked, so it is correct. I think probably it is correct. Now the earliest, just to set our minds at ease, the earliest level at which we can expect a reversal, we can expect a reversal that this market is going to reverse, is below that green neckline. This means we're going to 147.5, 148.5, okay, and these kind of levels. You're looking here at 1.48.67, 147.5 and 147. We will see why this is going to be the earliest possible reversal that we're going to get. We're just showing these levels first so that we are not scared when we're taking shorts at so close level to the neckline that the market will bounce quickly and hit our stops. Okay, so this is our most probable bouncing levels, and therefore we want to short down to these bouncing levels. So let's now take a look at the segregation itself and the momentum picture, the live momentum picture. So there is a 1-2 here, there's an internal 1-2 in green. That internal 3, actually, this is an internal 1-2 here in green, divides into a level, sorry, there was an internal 1-2 here, that's in white, that's a 3-4. This is high degree level 1, so this is a 5-wave structure at that neckline. This is a high degree, internal high degree level 2 again. At the neckline, the current market is doing a wave 3. All right, the current market is doing a wave 3, and that wave 3 is actually about to terminate in a wedge. You can see that wedge here. That wave 3 is going to be terminating in wave 5. You can see a 1-2 here, there's a 3-4, there's a 5. Just below the neckline, most probably 147.50, 148, and 148.50. It's only then that you can expect to see a higher degree wave 4 that will test that internal degree wave or high degree wave 4 in white at that neckline. So your best swing entry positions, short into wave 5, this is wave 5 here, all right, are going to be 152. Actually wave 1 here takes you all the way to 152.4. checked it several times. So we'll look here at that level, 152.37, 152.38. Okay, so you want to have sell half size at 151.5, half size at 152.3. This means, of course, this level 4 may not actually, reversal may not occur until the market goes all the way to 147.50. But reversal could also occur if there's really a strong uptrend in the United States dollar against the yen. Then we now understand that the best that the sterling can do against the yen is 151.5 or 151.44. So when that move goes on in the United States dollar against the yen, maybe we get that degree 4 in the sterling against the yen. We're ready, we're short there. All right, if we do not get these reversals, we will always have entries at 151.3, 152.3 below level 1 and 151.45, that level here. The stop is just above level 1. That yellow arrow here comes in at 153.5, just above level 1. We expect the segregation really is correct. There's a 1-2 again, there's an internal 1-2, there's an internal 3-4, that was a 4A, 4B, and 4C. This is a higher degree level 1, shown here in white. The market is simply doing a 3 now. It did an internal 1 and an internal 2 at the neckline, correctly situated. Now the market did a 3 and a 4. It's just going to be doing that 5. This is an ending wedge, a terminal wedge. There's going to be reversal, but it can extend, and the pattern shows that it will be flashing down to 147.50. So we would want to do an immediate entry for half size at these levels all the way to 147.50, and swing entries by shorting at 152.30 and 151.50 with a stop at 153.50. Okay, so let's take a look now at the internals in order to do that immediate entry right away, because we think this is going to 147.50. We just narrated this, and this is the same structure we're looking at, but on the 1 hour there's a 1-2 here. There is that internal 1-2 in yellow, there's that 3, there is that 4, now we're into that 5. The market shouldn't really rise above that point. I don't believe it can get easier than this. Okay, so we just want to short 150, 149.9. we have a stop at 150.7, 150.8. let's take a look. We're very close to 150 right now, as a matter of fact, and would appear to be having a zero line rejection on the daily chart. So if our segregation is correct, we already have seen 150. We may be seeing it again. Remember, this is a wedge, can test the upper boundary of this, and we're looking at that level 1. So we will not be surprised if you're looking at a 1, 2 over here, 1, 2, 3, 4, and a 5. You are retesting that level, 150.8. Okay, so let's take a look at the internal momentums. So the 4 is still very negative for hours, and the day is, I believe, negative, about to drift into strong negativity, but could be bouncing. And the week used to have a zero line rejection, could have a zero line rejection. Alright, so this shouldn't rise above 50% or 61.8, but 150.8 is 61.8.1, that level, 160.8, 150.65 actually, and 160.75. Alright, so let us then, we stand out of this level and short below that higher degree level 1. We would expect this is acting as a 1-2. That 4 runs back here. There's a 1, 2, there's 3, 4, 5. We can actually correct the whole structure because this is a 5 swing, and that would mean that going live we can actually short 150.7. we can even short a bit higher. Let's take a look back to the 1 hour charts. So we're really interested in this top. We don't expect the market is going to be rising above 150.150, and you want to sell 150.80 probably, and 150.70 was a stop at 150.150, 70 points higher. We're going to 149.50 and 148.50. We even know we can get 147.50. So we take, of course, the best profit target at 147.60, just above 147.50. We're looking at these levels here, 147.50. So we're going to take it to that level on an intra-week basis. Intra-week basis means that by the end of the week, if we're not at 147.50, if we're fortunately at 149, we will not take the risk of adverse volatility. We will consider that the trading session is over and close out at 149, 149.50 for the profits we would have accumulated. Recur the position using a trigger on a smaller time frame. Alright, so the market for sterling against the yen is a sell. We can sell actually at 150.75. We need to sell below that level here. The stop is 151.50 for 70 points. We're going for 147.50, but would close out towards the weekend. We're rejecting at the upper boundary of that wedge. We could spike above, and the wedge would still contain price. So we're still inside the pattern, that is. So you can spike all the way to 150.5. you see that moving average running down to meet us, so it will take time. We have to be patient, but really 150.5, 150.6, 150.7 are all sells. Our stop is at 151.70 again, 152 at the most. We're targeting 147.5.